So thank you, Brett, for joining me. Brett and I, what did we start working together 2 months ago now? Is that
Yeah, seems like the end of January, so coming up on 2.5, 3 months almost.
awesome? Cool. And so, if you could just give me maybe a little bit of overview of what you were doing before, what you're doing now, and just have an open conversation about trading and your
Yeah,
progress.
yeah, thanks.
Yeah.
So my trading experience has been mostly Forex for about 3 years. Just before that, I got into some stocks. I was following a book that a neighbor gave me called Rule Number One, which basically looked for companies that were underpriced in their stock, but everything else showed that they were doing well as a company. So they had some technical indicators to get in and get out. So I just saw, hey, you can make money like any old moment that you want, and found out that wasn't really the case all the
Right.
time. So switched from that into a local company who was teaching how to trade Forex. I did that for a long time, still doing that.
Is that Forex, cash Forex or the futures?
Just actually, I'm not even sure I know the difference. It's just a live market, Euro US.
Okay.
Um,
Are those the micro contracts?
no, not
Okay.
mine.
Okay.
So as far as work goes, I'm super, I'm an astrophysicist, so math is great. Charts are great. I'm not scared off by any of that. I like to figure out what, can work in my favor. So when I talked to my friend Mark Sanchez, who he was telling me about your approach from relative value, and I was like, wow, well, that sounds really cool. That's really different than anything I've heard before.
Let me
I
just throw that
guess,
out there that your buddy Mark Sanchez, probably working with me for 6 months now, really knows what he's doing. As an astrophysicist, that just not that I know very much about your profession, but it seems to me that charts would be tough because they're so subjective. And I imagine being more of a math guy, having something more objective or something like concrete that you can look at has got to resonate a little bit more. I know it does with me. That's why people who stare
yeah,
at charts all day, I just don't get it.
that's a good point. So something that is based in reality is for sure attractive to me, but I didn't know that was even out there.
Right.
So as I was studying Forex and learning how to read chart patterns, I noticed that sometimes there's a big move and sometimes there's a small move. And so then I'm like, okay, well, it's the same chart pattern. So then what else is there that's based in reality? So there is a part of both. And when I see a setup, I think in probabilities at that point. So if I
Right.
take this trade, how small could it go against me compared to how large could it go in my favor? And so those are the numbers that I go to. So yeah, so Mark Sanchez tells me about you. We were having lunch and I was just like, wow, let me, watch some of his videos and see what's going on. And again, I just thought, oh, wow, if you can see a relative value, you can just make money any old time. And then I found out, well, I know nothing about options and, nothing about yield curves and other stuff, which I think I'm more interested in the bond and yield
Mhm.
curves and stuff. But when I first started, it was in the middle of earnings season at the end of January. And so, so I got all of your videos and I was like, where do I start? You said earnings. I was like, okay, cool. This will
Right.
be,
It
I
could be a
got
little overwhelming if you just get everything and then where
it.
do you go from there?
It has been, yeah.
Uh-huh.
So, I've been through a lot of schools, so I'm really good at learning new stuff. And I found it was pretty hard to be on, just to have like so many videos available, to have, I don't want to say you have too many live classes because now I'm getting used to it and I love it. Not knowing what I was doing, I did feel lost. It would have been nice to have some kind of a, I don't know, some kind of a path description of where I
Sure.
was heading. And then I'd been like, oh, hey, this paragraph says I'm going to learn about buying options. And then as I'm learning about it on your videos, I would have known that I was on that path. But instead I was like, wow, what in the world are spreads and what is long volatility and short volatility? And now I know what these things are, but it took a long time. And I mean, I was, I guess, pretty frustrated because I thought I was good at learning stuff, and this was so different.
Right.
And I feel like there's a time, well, there is a deadline. I have 6 months with you, right? And so I'm like, oh, if I'm not learning fast enough, then I better do something else. So I'm just adding stress and pressure on myself to make it an awesome 6 months.
Well,
So that didn't help, but I mean, I had it
don't
out
do that,
myself.
because just, for the coaching program, we have those Friday classes, which are 6 months, but after that, you're part of the community. You're in our Facebook room. So, you have access to me. Any questions that you have intraday, you've been in the rooms, the community everyone's trying to help. So don't put this 6 months on top of you that's stressful. It's kind of interesting too, how the coaching program works is I do make all the content that I've ever made available, organized in a library. And when I first started doing the coaching program, I did have more of a syllabus where people would go, and I would take them through the journey that I think would be the best way to learn options. But I specialize in stock options and also relative value futures trading, specifically more of interest rate futures. So what ended up happening, because there are people coming in with different comfort level as far as their experience, I would start them on a journey and they say, Jonathan, I don't want to learn about options. I want to go learn about unusual options activity, or I want to learn about lockups. So then finally I said, you know what? I'm just going to give you guys all the education in a library format. Anyone going through the coaching program, you guys own that. So, if it takes 2 years, 3 years, however long, and that way you can kind of guide your own path.
Yeah.
Because that's always tough for me. It's not everybody coming through that has the same amount of experience. Everybody's coming in with a little bit different background.
I can totally understand it, that everybody's different.
Yeah.
I can totally see that.
And people see the market in a different way. I have guys who have been studying technical analysis for 10 years, and the process is trying to break them down so I can build them back up, because they've been doing the same thing for so long. So it's just, those are some of the struggles that I deal with as somebody trying to work closely with you guys, but it's good to get that feedback. We do our live classes Friday. We have one in an hour, and the topics are really what's going on in the market right now. And so I try to make sure that what we're talking about and what we're learning is also actionable.
Yeah. That sounds good. And I can appreciate that you've also gone through like your, you've changed how you approach this as a business from your side too, to, teaching and stuff. So I can tell you've improved a lot in your method and up until now. I do remember that you said in several videos, it could take you 3 months. So I'm almost at 3 months, and I feel like, now I know that he's not bringing up any more topics. Yes, I hear credit spread a lot. I haven't studied it yet. And so now I feel like now it's this big. Now I know how far I am compared to
right.
So it helps. But some kind of like a bullet point list, or maybe not quite like the journey you were taking people on before, but some kind of a description of even just topics by name would have been good. So now onto Facebook. I just have stayed away from Facebook for a long time because it's a time sucker. I see cool videos, and
right.
I can just spend a lot of time on there. So in my life, I just haven't been on there much. So it's now making a habit of checking your Facebook groups, and I'm really glad that there are 2 now instead of 3. I think that's great. Not sure I understand all the reasons why, but being simple is more helpful.
Just simplified it. Before, we have our masters in futures and masters in options, and then we had a separate advanced bond room. So we just brought the futures room into one room. So it's just the masters in options room for the coaching students, masters in futures room for the coaching students, Futures, I would say it's probably 60-70% bond futures because that's really what I specialize in. But then we're also looking at relative value opportunities
Okay.
in different equity indices, S&Ps, Dow, NASDAQ, oil spreads, and that kind of thing. But it's mostly interest rates, really. That's especially
Okay.
with the Fed moving. That's where I see the best opportunity.
Okay. So since I realized I wasn't taking advantage of the Facebook room for maybe 2 months, I got on there, and you can tell like I was just so unsure about things. I didn't even know what to go on there and start talking about. But I would read people's comments at first, and then I would see other new people coming on. I'm like, oh, well, they're asking questions that I don't know. I guess I didn't think you're supposed to ask those kind of questions. So it was just easier for me to see, okay, I guess I can just ask my simple stuff. What are the other things I should be thinking about as I'm entering a trade? So these are the kinds of things now that I can go and ask on Facebook. So.
Right. How I trade, during the day, I'm busy. I'm staring at the market. I'm always trying to add value to the Facebook room. I'm not the kind of person who's just going to post things for the sake of posting or just try to create a trade just because people are in there.
Yeah,
And like I'm like the puppeteer that's supposed to entertain everybody every day. I'm just not that guy. When I do see an opportunity, I'm always bringing it up in the coaching room first. And a lot of the ideas, like our uranium idea, as an example. So that's an idea that gets vetted in the coaching room, and it might take 2 weeks of going back and forth and talking with the community before we're sharing that idea with the membership. Really, my ultimate goal with the Facebook room is to create a virtual trading desk where I'm teaching you, I'm working with you. You're learning the relative value type approach. You're learning how we look at options. Over time, you're learning how we look at interest rates. And then down the road, this is a virtual trading desk where we're all sharing ideas together. We're all helping one another together. And that's where I'd really like to get to, because I'm a big believer, at least I know from my own personal training, that my edge is that I can follow a lot of markets. And my edge is that we go from being very slow to being very busy. And I think that especially if you break it down and look at where the trading industry has gone to, there was an arms race where people raced for speed. So professional trading firms and banks, they trade a lot faster, and their connections are a lot faster than the retail trader. So the retail trader needs to take that information and figure out, okay, where is their edge? Where is their advantage? And the real edge, which is different from the professional trader, is you don't have to trade. You could trade a lot less. You could sit around on the edges and wait for opportunity. And don't move until you see it. Don't move until that special trade presents, because, I do say the same things over and over. And I say the same things over and over because it's what I really believe. It's what I want people to really understand.
Yeah.
Trading's about entry points. Trading's about money management. So if we can find trades with stories behind them, then we just sit around and wait. It's like that example of Harvest the other day where it was trading at $8.50 and I posted, if it trades under $8, I'm an aggressive buyer. But if the darn thing doesn't trade down to 8, no trade. And that's just something that I'm okay with. Even if it traded down to 805 and I didn't get it, it turned out the thing traded down to 786 and now it's trading at 950. That worked out awesome. But it's having discipline and good entry points, and then knowing that once you buy at 8, if it goes 750, that's a great trade, rather than, oh no, here's a trade that's going against us, let's stop us out because it went under some silly technical pattern that someone told me that's bearish or so that's where we're trying to get to. And that's why I contribute as I do in the Facebook room. But it's not, I'm just not the guy who's every hour going to post something like I'm a trained monkey up there. It's not me.
Okay. Yeah, it's actually helpful to hear you say some of the stuff again because I'm even learning on this call, so that's good. And like, I really like your approach. You don't just have the one entry point on a trade. You're like, I'm probably not going to get the extreme here, so let me just get in. I'll get in again, and so I mean, I'll have more questions. I understand on the option side, if you're just buying, that's your risk. But there are some other questions I have, like, well, if you're getting stock, then how do you know, like, when you're gonna, exit out with, how do you decide your initial risk there? Because if it totally goes against you and now you're holding a bunch of stock that you don't want to have, you're going to dump it at some point, I guess, or
Right.
maybe not. I don't know.
So tell me a little bit about what's been like the biggest difference as far as the content that I put in front of you versus the content that you've learned. And do you feel that this style of trading is synergistic with what you're doing, what you were doing beforehand, or are you thinking that forget what you were doing, this is where you want to go, that there's more substance, it's something that really you can learn?
Okay, there are a few questions in there. So compared to what I was doing before, I still see some value in what I was doing before, but my approach has changed multiple times in Forex. So where I'm at now is really some stuff that I've learned from you, and also a book I read recently called like Trading in the Zone or something. Just put the probabilities in your favor. So
Sure.
I've asked you about how do you do like relative value in Forex, and you gave me an answer. I still need to explore like how to figure out. I don't know. I don't know how to do that yet. So that would be an addition there. So the value that I'm getting from you is know your risk beforehand. Hedging, like just about every trade is hedged, or at least your whole portfolio is hedged. So I didn't do that before. I just, I usually just have one trade in at a time. I'm going to go for a few pips or a bunch of pips, and then I just get out. So the laddering in, laddering out is something I've thought about there, and I can see that would be a huge benefit because I've always just, here's my trade. It's the whole thing in this one position. And then if it goes against me, I'm like, well, this is a better place to get in, but then I just have double the risk.
Right.
So I've lost money doing that. And yeah, just.
And that messes with your head because, I mean, it's really a binary event if you're just having one position. If it goes against you, even at the point, and that's what I don't want. That's like, there are some things, and I've been trading for 20 years. It's all I've ever done. It's my livelihood. I can't allow myself to be in a situation where a trade goes against and I feel like I have to cover, even though I want to take the other side. So if you're long and that trade goes against you and you're really excited about the level and you would love to be long, but yet people stop themselves out, that doesn't make sense to me.
Yeah.
To me, that just seems like, you know what? You're missing the best trade that you've found, but because you're poor entry points and poor money management, you're not allowed to be in the trade. So great, you're doing a good job, but you're screwing up the money management and you're going to kill your confidence because people have to understand, you're not going to buy the low and you're not going to sell the high. Like that's not a business plan. That might happen once in a while, good for you.
Yeah.
But having those expectations are going to disappoint you.
Yeah. So me getting more comfortable with, defending my portfolio and having it grow slowly is very different than what I've thought before. Because like I said, just one trade, how much did it make? Okay, great. Next trade, how much? Growing slowly, it's not something I want to do, but it's, I realize that's pretty much how it's just going to be. So then my questions are like, all right, and I remember asking you this the first time we talked, what kind of account size do I need to put together? And how much of it am I going to put at risk? And these kinds of things. And I would like to have, maybe down the road a little bit more, what is my dollar amount going to be in my account size? And let's talk about like actual, like personal stuff, because the generic answers, I'm like, well, I didn't learn anything from a generic answer. Yeah, everybody's different, but that doesn't help me know how I'm going to approach it. So I would love to know, like, you said something one time, and I'm just making up numbers because you didn't say numbers, but the question was something like, how much of your account do you put at risk? And you're like, a lot less than you guys think. So I don't know if that's like 10%. I don't even know what it is. But if it's, if I have a huge account and only 10% is at risk, well, that sounds great. How am I going to earn money, to get there? And
As far as putting money at risk, I look at it as at risk capital versus investment capital. And at risk capital, that's what I'm talking about. That might be 10% of overall net worth. The at risk capital, that I'm willing to use over leverage for sure. So that, depending on the market situation, I will get very aggressive with and feel comfortable risking using all the capital. It's not risking all the capital because I'm still managing the money, but I'm definitely at times using all the leverage of that at-risk capital.
so so the at risk.
But let me also say, as somebody who trades for a living, I am extremely conservative in my personal investments. Like, I do not risk capital outside of my trading account because I'm more concerned with the downside than the upside. I don't need the 20% return if that's going to bring me 20% of risk. I would take, 6% every single day of the week on long-term investable money. And then I'm extremely risky with my, trading capital, or the capital that I look at it as running my business.
So you have just the one account, or do you have two different accounts that you treat differently?
I have a couple of different trading accounts.
Okay, but you treat them all the same as far as
Correct. I trade them.
providing your income for your family.
And not only that, I treat them as one bucket. So any kind of trades that go in there,
I like that.
whether it's futures or options or interest rates, it's all hedging one another. It all has to fit within the overall portfolio. So a good example is if I find myself long, and if I find myself the market ticks down a little bit and I'm losing money and I'm making money on the uptick, well, now I feel like I'm speculating too much on the overall market. So in that situation, without a doubt, my next trade will be something that gives me short deltas. And what that means is it's either going to be selling a position because that will cover long exposure, or initiating a new position that would give me short deltas, like buying puts or doing, any kind of bearish trade. But if there's a really, really good long that I love, that is like, wow, the next Apple, like one of those emails, it's not for me, because not every trade is for every person. So you need to take a step back and make sure that, great, look at the trade, see if it's a viable opportunity. The next thing is it for me? Does this trade fit in with my portfolio? Does this trade fit in with the risk capital that I have available?
Yeah, that's really helpful. So, like, if I think I'm going to start out trading like, $5,000 and I lose 1,000, which I've done before, and it was the end of the world that week, because I was like, well, how far am I going to let this thing run against me? Anyway, it turned out it just was a better position, and later on it like quadrupled. So, but I got out. So for me to think small accounts, like a few $1,000s, I'm like, well, I could just, if I lose some money, I could just add to it next month from my, my job. But eventually I don't want to have the job forever. So I work as a data scientist, and I make a lot of money. But I don't know how long this industry is going to look this same way.
Sure.
But I see some changes, and I'm just glad I can still make this kind of money, because technology is changing. Tools are like sort of replacing people, but I think it could easily replace a lot of salaries. And so I don't know, but I don't know if it's just that reason or if I just want to have, more my time is my own, and that's why I want to trade. But I like the idea of trading, and I feel really strongly that this year I want to have at least my living expenses coming from trading, and that's $5,000 a month. So anyway, I'm thinking a lot about that right now. We're
Sure.
toward the end of April. I feel like, maybe toward somewhere third quarter, maybe I want to be really confident in what I'm doing so that I can figure out the dollars. And then, that's when I want to get my money. How much do I want to put in my account? And then, same conversation again.
I would back into like what you said about having a $5,000 account, and if you lose, you could always put more money into it. I would have that $5,000 or $2,000 account, and you need to look at that like it's a $200,000 account and treat it the exact same way.
Yeah.
There's no difference. And yes, there's a difference if you have $50 of risk or $5,000 of risk in your mind. But as a data scientist, you understand you have to train yourself that there's absolutely no difference whatsoever. So you can't just have that mentality that if it goes against you, you could put more money in, and you never want to risk 20% on one trade opportunity. It's obviously trading too big. So that's what I would, the purpose of paper trading, the purpose of practicing with a lower amount is to create as much of a realistic environment as you can. And part of that is you don't get to re-up. Maybe you put yourself in the penalty box and you go back to paper trading for a while, or give yourself some kind of punishment for drawing down that account because you're not ready if you're blowing out an account, the small practice account, because it's the same thing.
Yeah.
We used to, one of the things that we did when I was with a proprietary firm is there was an option that people could look at their position and look at like 1/10 of their position or look at half of their position, because the traders that we would trust to trade firm capital were trading really big size. Like we were walking around with 1,000 10-year futures contracts, and people would get very, very uncomfortable and very intimidated by those numbers. So you could actually monitor your position by just looking at 1/10 of it and just tricking yourself. So you would have, it's the same thing, right? If you have 1,000 of something or 10 of something, if you're trading the 10 lot in 1 lot increments, or if you're trading the 1,000 in 100 lot increments, take away liquidity risk, which in the bond market is not an issue at all. It's the same thing. And for some people, it's having that self-awareness to know that, what, I'm screwing with myself with the numbers that I'm trading. I have to change my thought process. And that's why one of the things that we talk about is when you're trading a low price stock, like a $5 stock, most people don't trade those $5 stocks. Treat it like a $50 stock. It's the same thing. There's no difference. I got an email yesterday, where someone said, "Hey, Jonathan, what's your best stock under $5?" I'm like, well, that doesn't make sense to me. If you're going to invest $1,000, it doesn't matter what the price of the stock is. There's no advantage to buying 10 shares of a $10 stock or 1 share of a $100 stock.
Yeah.
And that's something that, it sounds basic, but it's something that people need to learn first, but then in their mind, they have to understand that. They really have to, with every fiber of their being, because you have risk on it, and everyone's going to get a little emotional when trades go against them.
Mm-hmm. Yeah, and I know there is a little piece for me between going from a small account to the super huge. I know the percentages need to be the same, but there is that thing where the dollars stand out more right now.
But that's because you're not comfortable yet. You're not.
Yeah.
Once you see the opportunity, that turns to being uncomfortable to being excited, and also knowing that if you do feel like that, well, maybe that's a sign. Maybe it's slowly build up to being able to manage money like that. the more money, obviously, the quicker you have to be to protecting your account. But the whole way that we're teaching, or I'm teaching, and everything is hedged, and we do it from a portfolio side, that's all about managing real money. That's
Yeah.
trading is trading. So I look at it, there's, if somebody's got a $20,000 net worth or a $2 million net worth, there's one way to trade.
Yep. Okay. I think that, well, there's a comfort level that I got to go through, but I think having this conversation again in a few more months would be really good.
Sure. No, I like it. It's great to get feedback from you as well. I know you've helped me with how we share ideas every Sunday, and the format to send those ideas. I still use a lot of lingo, which is just trading lingo from being in the business. So when we put stuff on the spreadsheet, like open position or closing only, I just assume that people know what that means right away, and it's just ignorance on my side, and just slowing down a little bit and making sure that there's people of many different experience levels that are out there.
Yeah.
So as much as you're learning, I'm learning as well. I've been a trader my entire career. So making videos and sending out emails to a large group of people, I'm learning as I go as well.
Yeah. Well, it's been really good, and I mean, we're growing together in different ways. So that's.
I appreciate it. So you're good. You're good. You're happy. What you feel like the futures are resonating a little bit more than the options?
Yeah, just because there's a steeper learning curve for all the lingo around options, and there's not on the futures. I mean, I haven't traded futures specifically, but like S&Ps, I've heard about them, and I'm like, well, it's just like entering a trade, so it's a lot the same. So
I look at it as the same. It's just a derivative. They're all, options are a derivative of stock. Futures are a derivative of whatever cash instrument that they're representing. It's kind of funny. I think that options might be a little bit more intimidating to learn, but I think the futures trade takes longer to perfect. I think that options you can get up and get a quicker understanding, but I think the futures trade, you need some battle scars. It's like the Luis interview that I did last week. Mm-hmm. Luis, took him a while. He says it on his own. It took him 12 months. 12 months is a commitment, and a lot of people don't get to learn for 12 months because they get too frustrated, and they'll force things in the market and start digging a hole and losing confidence, and then off to do something else. So to be able to have that staying power where you see something in front of you that's worth learning, and you're okay with the time commitment, because for some it takes 6 months, for some it takes 12 months, maybe even longer. But for those who commit to it, the juice is worth the squeeze.
Well, I'm more okay with the time now because, I'm going to be 44 this year, and a lot of times I've just seen, oh, hey, that time already passed, and did I do what I wanted to do with that time?
Right.
Sometimes yes and sometimes no. So now I'm just like, I'm just kind of taking time out of it, and I'm just like, well, what do I want to have in the end? And then I'll get there. So
how's your schedule like during the day, or how much time are you spending looking at the market and going over videos? What's your schedule like?
Yeah, so I pushed really hard in the beginning to do 5-8 hours maybe a week, and I'm not doing quite that many now. Also, I just got back from a week vacation, so just even getting back into it and setting up the webinars from email and stuff, just getting back into that. But I have on my schedule now I got to catch up. I feel like so there's the 4 pillars video, there's the 10 reasons traders fail video. And so I don't know, again, I'm putting pressure on myself to just catch up and do awesome. But in general, I do probably an hour or 2 a day. I work from home for my day job. So I feel pretty flexible in what I can do. but also have some kids at home for part of the day too. So
Sure. Yeah, I got
yeah, I look at what I'm going to do all the time. Even this last couple of days, I'm like, uh, sometimes I'm like, do I really want to go and get an office like down the street
right.
and just have some more quiet time? But I don't know. It's just a big change even to do that. So
So right now, what is the most interesting thing for you to learn? Like interest rate futures, is that what resonates most with you right now? Or are you still working towards the options?
yeah, that's a good question. Um, it might be options just because I've watched so many of those videos and almost none of the others.
Mm-hmm.
And I like to, well, in the past, I have done a little bit of a lot of things, thinking that a little bit of a lot of things will give me what I want, but it doesn't. So I'm like, if I can complete all the training on one and then do some demo trading so that it makes sense and then start the next one, that would be good. But yeah, I almost switched over because there was some exciting move happening in the bonds. And I was like, oh, this looks easy because it was really obvious, or at least it sounded obvious when you were describing it. So, but it's been quiet on that front again. So, and then I went on vacation. So I guess, just the options right now. Yeah.
Crazy. That's the bond futures trade where it goes quiet, and then we had that move, and there was a really great trade, and now it's quiet again. And I was only asking you that because just talking with you, I kind of get a little bit of feeling that you're bouncing around from one topic to the next topic to the next topic. It might be beneficial just to really zero in on one thing. Learning options, I think it's really important to understand how options are priced. So there's that video, I think it's called how to price an options tree.
Okay.
That would be really helpful in just really understanding the difference between extrinsic and intrinsic and a premium, and being able to look at the value of the calls compared to the puts and just understand the relationship between those. I think that those would be really important videos right now. And I think you'll get more out of those than a video like 10 reasons why traders fail.
Okay.
That little bit more of like relaxed, flying video or running video, rather than like looking at an options tree and really understanding and learning and getting familiar with the Greeks and how we look at delta and theta, and understanding why theta and gamma are opposites. Like, I think that's where, just with what you're looking to do, learning like how options work, getting comfortable with that. And then the other stuff happens over time, but having that foundation, it transfers, all options on futures.
Okay.
That's what I would suggest.
Okay. Yep, I'll stick with it then. So you, even the different courses that you have for options, there's the earnings videos, and then there's just the options 101 stuff, and I can't remember if there's anything else. Seems like there might be, but
There's so much. I mean, there's the unusual options activity. Some of my favorite videos are those expert secrets, when I had my friend Donnie come in for 3 days where we did that 3-day class. Have you got a chance to watch those?
I don't think so. No.
I would. Those are awesome. Those are
Okay.
So Donnie is Donnie and I started working together in 2003. It was actually I've never done this. He was the first coaching client I ever had. He made $1 million in a month. And Donnie lives in Atlanta, and I brought him out to Chicago, and I said, I got this coaching group, let's do some classes. And he's like, what do you want to teach? I'm like, dude, I want you to teach whatever you think that these guys would get the most benefit from. And he just wanted to do 3 full days on position management. That's all we talked about. So the first day is how to manage a losing position, like a full 60-minute class. The next day is how to manage a winning position. And the first day is how not to blow out your account. He calls it the golden rule, how to protect yourself from account blowout. The second day is managing a losing trade. And the third day, what, from his own words, he really specializes in, and I would agree, it's how to manage a winning trade. Because in trading, go get it while the getting is good. So that's why there was so much excitement about the bond trade. People made a lot of money in that last week. You got to make a lot of money when it's good, because when the trade's shitty, they're going to take your money away. So when we're right, let's get paid. And it's okay to make a whole bunch of money on one trade. Don't just get out and be happy. You know,
Okay.
It's okay to get out of the way and let these things move.
Okay.
Don't move against us. Let's enjoy that ride when they move in our favor.
Yeah. Yeah, that helps. So where are those videos from him?
In the in your library, in the Apex library, if you go to that under options, you'll find them. And if you don't,
Under options. Okay. Is it called, oh, it's called Expert Secrets? Is that
called
what
Expert Secrets. Yeah,
okay, I'll find that.
yeah, they're great. So yeah, 3 different classes, but they were all back to back to back, all between like 60 and 80 minutes.
Okay.
The feedback's been great. I mean, people say that should be a prerequisite for everybody coming in.
Oh, yeah, that's good. Then I really want to watch those. Yeah, and I know that I do bounce around with stuff, and then it's not fulfilling. And so then I'm like, yeah, out of all this stuff, what am I going to do? And so I do go through that, personal inventory once in a while. And
It's good. It's the process that you go through. Just understand it, and just be patient.
yeah.
So we gotta hop on. We got our weekly class, but dude, it was great talking to you. This was
Thanks for going this extra time. I really appreciate it.
my pleasure. It was fun for me, and glad things are going well. And just I'm here for whatever you need.
Okay, cool. Thanks, Jonathan.
All right, buddy. Thank you.
Okay, bye.